Bitcoin, October 26, 2025. Weekly summary and forecast for next week. Bitcoin's overall bullish above the 200 MA on the weekly time frame. But seeing as we have a week coming, let's see what the Forex Factory says. This week to come, from Monday to Friday, we have high impact market drivers on Wednesday, Thursday, and Friday. Monday is pretty quiet. Liquidations. We have some liquidity up into 111.5 or 115,000. Or no, even more liquidity down to 112,000, indicating a pullback. Back to chart. From the weekly, we're going to go down to the daily. Daily, still we're above the 200 MMA, popping up there. Dip, bounce, up. And so we have a slew of news coming that may give it a catalyst to movements of this week. We're going to have liquidity up here, and liquidity down here, and probably here as well too. Hourly. On a 1 hour chart, we're above 200 MA. Bullish indication there. Got a lot of ups and downs, up and down, up and down. But now we're above. See if it continues. So far, we can trend. Higher lows, is continuing. $15-minute. Above the 200 MA. That's good indication. Before we go down and get more detailed, we need to check out the CME gap, which we have on the 15-minute here. This is from last week, and now we have a new one here. So let's establish our CME gap. Zoom in to get a better, more accurate approach. Look at the 1 minute here. So the high for this candle right here is 111.170. The low for this candle, which is today, is 113.495. So now we have accurate representation of what the CME gap looks like. And we can stretch it out for the week to come. So most likely price has a gap here, so it may want to come down to fill this gap, which kind of explains the high liquidity on the chart that we looked at here. Liquidity is down here. This is probably around the CME gap area that we're looking for. So expecting probably a dip before we rip up. So now that we've talked about the CME gap, let's go back to the 15-minute detailed version of what's going on with the trend lines that I have established. Let's zoom out to 1 day. We got a definitely bullish trend here, and then this is bullish trend there as well too. Zoom in. This trend touches this part, so that's good. And we're trending bullish, especially as price action came down, dipped underneath the 200 MA here, but popped back up. Let's go zoom in more. So this is when we saw the long-term trend here. So we, due to that increased trend, we connected those. Then after that, we connected this one. Then after that, we connected this guy for the increasing incline of price action. In fact, it came so much that it broke this action line. Another definite bullish indication. But remember, we still got the CME gap to attend to, possibly, unless it stays open, which is possible. But as of right now, we're still trending up. 15-minute time frame, up, more angle up, no retracement yet. You can see the can see here, this is around where the 21 moving average will be. This is 200 moving average. They're far apart, so we're expecting probably a retracement down, because these don't like to be too far apart, but it's possible to still extend a little bit more, but we'll see. 5 minute. This is not really accurate representation yet. This is what we got going on. See how long it stays, if it stays up here above. Okay. And 1 minute time frame. Still above the 200 MA. Definitely bullish. When we dip below this 200 MA, we'll see some weakness. But if we can break above this, these two connections, that might be a good indication of bullishness here. This is tentative, so new. So I know I deleted the other one in the past, but this gives an example of what's going on. Action line here. Change it to red. Okay. If it goes above that, it's definitely a bullish indication on the center line. Your pour bar or pour bar close. So pour bar. So it's going up here. This is triangle, so it's going to have probably some action happening between here. Pump up or pump down. Pump or dump. It's above the 200 MA, so it's possibly that's going to be more of a pump. That's the conclusion for this analysis.